Oh, look at my little men growing up so big. Man, I bet you guys would be proud of me. You see, I got rid of all my jewelry. I put it in the pawn shop, got me a little bit of cash out. You know, I'm putting it away for you guys, starting up your trust, putting in a savings account for you guys to go to college. We stopped buying that cheap Stimulac. And I know you guys are happy you ain't getting those diaper rashes no more because we ain't using those cheap Pampers. But yeah, it's all for you guys. I had to make some changes, some better financial decisions, and I'm glad I did. It's all for you guys.
I'm really proud of you, Dad. I really am. You're doing the right thing. But how about now we level up? Take that money out the savings account and put it into a stock market. Let it work for you. Now, I know our test results came back as a match, but I'm not too sure about Buddy over here.
Hey, yo, Keisha, which one of your family members got Hazel Eyes? What's great, hustlers and finance finessers? Welcome back to another video. So we made it. We made it through the year, and now we've made it to a new year, so we can start off fresh. Anything that was holding you back last year, anything that was putting you down, we're going to leave it in the past. And what better way to start off fresh than by investing in the stock market? Now, the stock market is going to be an essential piece along your journey towards financial freedom. So it's best that we pick up these habits and practices and start investing today. So some of you may know that I do have a background in finance. I went to school for accounting, but aside from that, I've done plenty of research on this topic as well as actual experience trading in the stock market. So I think I know a little something about this topic. If you're new here, be sure to hustle over and finesse that like and subscribe button. You won't regret it. This channel is all about personal finance, self-development to promote financial literacy and self-empowerment. So let's just get into the topic. What is a stock? A stock is an investment that represents a share or a piece of a company. Before you can buy a stock, the company has to issue an IPO. And what an IPO is, an initial public offering. This is when a company decides to issue its shares of its company to the public. A company might decide to offer an IPO for many reasons, such as if it wants to grow and expand, or if it just wants to liquidate some of its assets to pay its owners or initial investors. Most companies usually issue an IPO when their company hits a plateau or a ceiling. Think of Shark Tank. When you see a contestant go on and pitch their business to the sharks, this is a form of like a small business trying to get initial investments from private investors. The sharks are the private investors, and when they decide to bring you on or to invest in your company, you have your initial investors. Now with this, you can grow your business for whatever reasons. You can get inventory, hire new people, expand, get new buildings, whatever it is you need to build your business up. Once your business gets to a point where it hits that ceiling and it's not expanding anymore, a company will issue an IPO to get investments from the public to help expand and grow the company even further. The IPO determines what percentage of a company is being sold to the public, how many shares are going to be issued, and what the initial price of the stock is going to be before it hits the stock market. The stock market is a collection of markets and exchanges where public listed companies are traded and sold. So think a farmer's market. Instead of fruits and foods being sold, the items being sold here are companies. Okay, let me give you an example. And just be warned that these numbers are extremely exaggerated for ease of explanation. All right, you've done your IPO, and now the company has been valued at $1,000. Once this happens, you decide that you only want to sell 10% of your company to the public. This is a value of $100. And then you decide that you only want to sell 10 shares of your company. So what's going to happen is The company is going to be broken into 10 pieces at $10 a piece or a share. When someone buys a piece of this company, they own a piece of the company. They become an owner of a piece of the company. The way you make money in the stock market is when the overall value of the company increases, increasing the value of your share. So in our example, this company that's valued at $100 collectively increases to $150. What that means is there was an increase of $50 that is split between all the shares, bringing your share price from $10 to $15. Now, if you decided to sell your piece or your share of the company, you would have made a profit of $5. Some factors that affect the stock market in a negative or positive way include the economy, politics, and market psychology. Around March, when the COVID-19 pandemic reached its height, this was a great example of how economics and politics affected the stock market in a negative way. A lot of companies' stock prices started to plummet, and this is due to the uncertainty that people felt when it came to our economy and our politics given the situation. Market psychology plays into your personal feelings about a company. So for example, a bad press release or bad publicity will make a company's stock price go down, and vice versa. Good publicity or good hype around a company will make the price go up. The main thing that's driving this and pushing this is supply and demand. If there's more demand from the people, the price of a stock is sure to go up. While if the demand is low, the stock will go down. Same as supply. If people feel like there's something they want, but there's not enough of it, the price will go up, and vice versa. If there's too much of it out there, the price will go down. A good example of this would be the shoe market. People that resell Jordans or the Yeezy shoes, they understand that because the supply is so limited, they can buy and resell these shoes at a higher price, and people are willing to pay for it because the demand is so high. Now let's go over a couple of different investment types that can make you money. Now it goes without saying that investing in the stock market comes with a certain level of risk and reward. And depending on what type of stocks you're investing in will determine your exposure to said risk and reward. Okay, so the first type of investment you can make is into an individual stock. And we kind of already went over what a stock is. It's a piece of a company. And the way you make money from this is either by the value of the company increasing, which will increase the price of the stock, or if this company pays out a dividend. Now, a dividend is simply a payment that a company makes out to its shareholders when it realizes its profits. Another type of investment is bonds. A bond is a loan given to a company or the government that pays out a fixed rate to its investors over a given period of time. So the way you make money off of bonds is by receiving interest payments from the company. Think of it like this. If you ever taken out a loan, that extra payment that goes towards interest, now think of that in reverse. The company is going to be paying you interest on the amount of money that you loan to them. Now the next type of investment is an investment fund. And what an investment fund is a pool of capital that a number of individual investors pay into, which is used to collectively invest in stocks and bonds. Think of it like this. It's a mixed bag of stocks, bonds, and different companies all wrapped in one that you can then invest into to own a percentage of those companies. Now, the way you make money off of this is a combination of the previously mentioned methods. So that can be by price increases due to the value of a stock, dividends, a bond paying you interest. So there's a mixture of ways that you can make money. And I know we've all heard the saying, do not put your eggs in one basket. By diversifying your portfolio, you're saving yourself the hassle of worrying about if the price of one company is going up or down, because there's a mixture of many companies that you're invested into. So if one's going down but the other ones are going up, you have nothing to worry about. Different types of investment funds include mutual funds, index funds, and exchange traded funds. Mutual funds, as I've stated, are a bag of companies or securities like stocks and bonds that is handled by a fund manager. So you buy into a mutual fund and the fund manager is constantly buying and selling different companies and different stocks to increase the overall value of the mutual fund. The same thing with indexes. It's a bag of companies that you invest into. The only difference is that this isn't managed by a fund manager, and this would be considered a more passive way of investing because you buy into the index fund, and based on the value of the index and how well it's performing in the market, that determines the value you will get out when you decide to sell. The last one is exchange traded funds. Now this one differs from the previous two in that this is traded like a stock. So indexes and mutual funds, the price of those aren't fluctuating throughout the day. The price only changes at the end of a closing period, which is the end of the day. But with an exchange traded fund, it's kind of like investing in an individual stock where the price is continuously increasing, decreasing, and fluctuating throughout the day. So overall, investment funds are probably the best type of investment that you will want to make if you're a beginner, as it poses the least level of risk. All right, there's one more investment type that I like to go over, but I won't go in depth with this because this could be an entire video in of itself, and that is investing in retirement accounts. Now, the most common retirement account that most people know about are 401ks. Now, this is a company sponsored account wherein you are investing towards your retirement using the same practices as an investment fund. So it's a bag of different stocks, bonds, companies that is being invested into for your retirement through your company. Now, this is important to mention because a lot of people, myself included, I believe that you could only build a retirement if you worked for a company that had a 401k, but this is not the case. Even if you don't work for a company that offers a 401k, you can start to invest into your retirement yourself. You can do this by investing in an IRA. And what this is an individual retirement account. And just like a 401k or an investment fund, you're investing into a pool of securities like stocks and bonds in different companies that will grow over time and that you will be able to pull from when it's time to retire. Now, it's key to note that the difference between a retirement account and a mutual index or ETF is that these are taxed differently and these are a little less liquid, so you'll have penalties if you decide to pull out your money early. But the benefit is that this is probably one of the least riskiest ways to invest your money, and it's a overall benefit in the long term. So let's get into some different ways you can trade in the stock market. So the first way to trade is by day trading, and day trading is simply buying and selling a stock within a day cycle. This is the most risky way to trade, and this will bring the most profits in the short term. The next way you can trade is by swing trading. So unlike day trading, you're not going to be selling the stock within a one-day cycle. You're going to probably be holding the stock for a period of time. Now, this can vary, maybe a week, a couple months, up to a year. This is less risky than day trading and brings in the most profits in the midterm. The last way you can trade in the stock market is by investing. Now, investing simply implies that you're buying a company and you're holding it for long periods of time. So this could mean holding a stock for over a year up to 10 years plus. And this is the least risky among the three and brings the most profits in the long term. Just to note, day trading and swing trading takes a little more technical knowledge and analysis in order to be successful. So it's best for beginners to probably invest for the long term. Okay, let's go over some best practices that you should take into account before you even begin to trade or invest. Now, the first and probably most important thing you should know and understand is that investing in the stock market is risky. I can't say it enough. When you're just starting off, you should only invest an amount that you'd be willing to lose. Next, educate yourself and do your research. But I must say, if you've made it this far in the video, you're off to a good start. You could also find valuable information online or through books. Also, you could use stock simulating apps. By using stock simulating apps, you will get the experience and understand how the stock market works without actually having to invest your own money with the risk of losing it. This is a great way for beginners to start and get their feet wet. Also, before you begin to invest, it's best practice to already have a savings established or an emergency fund. This way, if you lose any money in the stock market, it will not affect your well-being and your personal situation, because you already have something put away and put aside for that. Also, you're going to want to pay off any debt that you have. If you invest knowing you have a ton of money that you owe to someone else, it kind of defeats the purpose, and you'll begin to work backwards. Lastly, do not invest any money that you'll need later. I hope I don't have to tell anybody this, but do not use your rent or bill money to invest in the stock market. Do not use your money for groceries to invest in the stock market. You always want to make sure you have that money secured for your necessities, and anything in excess of that you can put into the stock market. Just a little disclaimer. I am not a financial advisor. This video is not intended to advise you into making any decision. Rather, it's intended to give you information based on my experiences that you could then use to do your own research and make your own sound decision. Whew, okay, all right, so we got through all that, and now you're probably wondering, all right, now how do I go about buying the stock? The way you will buy a stock is by using a brokerage. Luckily for us, with the dawn of the internet, buying and selling stocks have become extremely easy, and that's through online brokers. Now, a broker or a brokerage is simply the tool or the middleman between you and the stock. So when you want to buy or sell a stock, you'll go through a broker and they will issue a buy or sell order on your behalf. Now, there's plenty of online brokers that you can use and go through. I'm only going to be sharing a couple that I use personally and firsthand, but this is by no means an endorsement to use these. Please go out and do your research on the different brokerages and pick the one that works best for you. So the 3 online brokers that I use are Fidelity, TD Ameritrade, and Robinhood. All right, now before we go, I just want to leave you guys with this message, and that is, do not be afraid to start. The thing that's holding us back is our lack of knowledge and understanding of stocks. So we build this fear in ourselves that stops us from ever taking part in it. Investing in the stock market will help you become financially independent and empower you. A lot of people believe that you need to be rich or have this genius level intellect when it comes to finances to invest in the stock market. And I'm here to tell you that you don't. In fact, you don't need any money to begin in the stock market. So here's what I'm going to do. I'm going to leave a link below for those of you that would like to begin investing to open a broker's account with Robinhood. Robinhood is very user-friendly and great for beginners. By using the link below, Robinhood will give you and me 1 free stock. So think about that. You won't have to put any money into your first investment because Robinhood will give you your first free stock. And this will be a great way for you to determine if you would like to continue or to stop investing in the stock market. This way you'll have your free stock and you'll be able to gauge and track its performance. This way you can research whatever company it is that you're given and decide that you want to continue to invest in it or invest in different companies or pull out. And there's no harm to you. There's no loss to you because you don't need to put any money into it. But you'll gain a stock, and if you decide to sell, you'll gain that money. So just think about it. I am not sponsored by Robinhood. This video isn't sponsored by them. I just think that the app is pretty good for beginners. So if you think that'll work for you or something that you're be into, I'll leave a link in the description for you. Okay, one more thing. I know that this information is pretty complex and I may have lost a couple of you guys, but if you're still here, just know that I really appreciate you. I know I went over a ton of terms that I didn't really get a chance to go into. Just know that there's an extremely valuable resource that you can use in order to look up and learn some of these terms that I'm using and help you on your journey to financial freedom. And that's by using the site Investopedia. Now, this is a site I've used all throughout my financial career, while I was in college and even now. Investopedia is a great resource for you to understand and learn different financial terms, as they really do a deep dive and give you a great explanation of each term. I'll leave a link to that in the description as well. So if you felt like this video brought you any value, or if you enjoyed it and you got something from this, please be sure to like, subscribe, and comment below. I'd really like to know what you guys think. If you guys have further questions, let me know. Tell me what some of you guys' goals are. Tell me what you plan to do with this new year, how you plan to invest if you decide to, and what you wish to achieve. And with that being said, as always, I want to wish you guys peace, positivity, and prosperity.